In this video, we'll demonstrate how you can set up pay types in personnel budgeting. In Martus, pay types are used to define all the ways you compensate your employees, both pay and benefits. When setting up pay types, you'll want to consider the cost to your organization, not the cost to the employee. You could also consider creating pay types for non-employees. As a high-level review of Martus's personnel budgeting, when setting up personnel budgeting, you first create the pay types, and then these pay types are added to positions as applicable. Martus then calculates the cost associated with each position. Afterwards, you can run reports on compensation in summary or detail, apply allocations to these costs, and then post the scenario to your overall budget. For this video, we'll focus on how to create pay types. Let's go into Martus and set up some examples. We'll begin with two base pay types, one for hourly base pay and one for salary base pay. Pay type names are user-defined. We'll call this one wages hourly. First, choose the GL account to which this is budgeted. If you have more than one GL account for hourly wages, you'll need to set up separate pay types for each one. For tax, we'll set this to taxable. This tells Martus to calculate FICA taxes for this particular pay type if you use the automatic configuration for calculating taxes. For more detailed information on this, you can click the blue help icon. Next, we'll set the category to hourly. This will create an hourly calculation based on the number of hours per pay period for the positions to which this pay type is assigned. For our frequency, the frequency drives how often this pay type gets calculated. For this hourly pay type, consider how often your employees are paid. Do they get paid weekly, every 2 weeks, or twice a month? If you choose weekly or bi-weekly, you'll have an extra pay period in some months. For some users, bi-weekly is also known as fortnightly. So a question to consider is this: do you budget for hourly or salary wages on an accrual or cash basis? If employees are paid on a weekly or bi-weekly frequency and you budget on an accrual basis, it's best to set the frequency to monthly. However, if you budget on a cash basis, then you would set the frequency to weekly or bi-weekly, and some months will have an extra pay period. We'll choose semi-monthly. The start date, limit, calendar year limit, and regular amount are not needed for this pay type. If you enter a regular amount, this will be the default for this pay type when added to a position. However, since each position's hourly rate will more than likely vary, we don't want to put a regular default amount here. So finally, we'll click Save. For our next pay type, we'll call this one Wages Salary. Choose the GL account this needs to be budgeted to. Again, if you have more than one GL account you use for salaries, you would need to set up separate pay types. For tax, we'll set to taxable. And for the category, we'll leave this one set to regular. For the frequency, this is the same principle as before. Choose how often this pay type needs to be calculated, like we did for the hourly pay type. We'll choose semi-monthly as well. And last, let's save this. Next, let's add a pay type for a bonus. Your bonus structure will determine how you set up this pay type, and you have multiple options here in Martus. In this example, we're going to set up a bonus that assumes that all employees receive a bonus that is 5% of their base pay, whether hourly or salary. For the category, since the bonus is a percentage of regular pay, you will choose the percentage category. In the frequency, the same principle as before, choose how often this bonus needs to be calculated. We'll set the frequency on ours to once. When you choose once as the frequency, you'll need to let Martus know when that bonus needs to be calculated. So we'll need to enter a start date. For calculation purposes, Martus needs to know what these percentages are and what source pay types should be used as the basis of the percentage calculation. We'll set the employer responsibility at 100%, so it looks at the full amount of the source pay types we define below. And then we'll set the source percent to 5%. Here, you'll want to enter the maximum percent that an employee could actually receive. You have the ability to override this default source percent lower if necessary, but not higher. For the source pay types, we'll choose our wages salary and our wages hourly. This way, any position with one of these pay types and this bonus pay type will get the bonus calculated based upon the amounts from the source pay types. Because we have the frequency set to once, If the annual salary for the position is $100,000, the bonus in December will be 5% or $5,000. And finally, let's click Save. Let's add a few other examples for some benefits. As a reminder, we'll budget for the amount the organization pays, not the employee's portion or withholding. Let's start with health insurance. If you have multiple plans, for instance, an HMO or a PPO plan, where each have different rates, you could set these up as separate pay types. Next, we're going to choose the account to which it needs to be budgeted to. We'll leave this one set to non-taxable, as well as the category will be left to regular. And we're going to set the frequency to monthly since this is typically paid monthly. Down below for regular amount, we're going to choose to add new tiers, and our tiers are going to be based on coverage. If coverages have not been set up yet, you can do so by going to Personnel Budgeting and Coverages and adding the coverages applicable to your organization. Martus currently supports 2 coverage settings on employees and in the pay type setup. Coverages get assigned to employees as applicable, and then when a pay type that is based on coverage tiers is added to that employee's position, we'll pull the amount we enter here on this pay type. In general, you'll probably base your health insurance benefits on coverage 1 and base your other benefits on coverage 2. You do have the option to override the defaults we're about to enter in on the position if necessary. Down below, we'll enter our different tiers along with their amounts. And finally, we'll click Save. You can use the same setup for other types of insurance, such as dental, vision, or other plans. You could also set up AD&D, short-term and long-term disability, and more as separate pay types. You might also use pay types such as housing allowances that would not be taxable, maybe a profit-sharing bonus, FUTA, SUTA, using percentage categories, and so forth. Let's finish by discussing 2 other potential pay types. First, let's consider a retirement match, also called superannuation. In this example, let's assume the employer matches 100% up to 5% of the employee's wages with a 6-month waiting period. Note that this calculation is going to be based on employee anniversary dates, so you need to make sure that the data is included on each employee record. Down below, we'll enter the name and then choose the account to which is budgeted and fill in the appropriate fields. We're going to leave start date, limit, and calendar year limit all blank. If we did enter a limit, then Martus would stop calculating when that limit was reached. Next, we'll set up the employer responsibility at 100%. This way it calculates based on the full amount of the source pay types we'll list below. Then we'll add some new tiers. Our tiers here will be based on months employed. For the name of the first tier, let's enter waiting period. We'll leave the minimum months employed set to blank, and we're going to enter the maximum months employed set to 6. The source percent here will be 0, so that it doesn't calculate the match during the first 6 months of employment. For the next tier, let's enter eligible for the name. The minimum months employed will be set to 7, and the maximum will be left blank. This way the match begins calculating on the 7th month of employment and carries forward. And then we'll enter our 5% match here in the last field. Finally, we need to tell the system which source pay types to use as the basis of the 5% match. So in our example, we're going to choose salary, hourly, and bonus pay types. When setting this up, be sure to include all pay types to be used as the basis for this calculation. And finally, we'll save. The last one to mention concerns payroll taxes. In the US, this is commonly called FICA, which refers to 2 kinds of payroll taxes, the employer portion of Social Security and Medicare taxes. In Martus, you have 2 options when setting up payroll taxes. The first option is to set it up in the configuration within Personnel Budgeting. You can use this method if you use one GL account for FICA, including both Social Security and Medicare taxes, and 2, there are not a significant number of employees who are subject to FICA taxes that have income above the Social Security wage cap. If there are only a couple employees above that limit, you could still use the config setting. Just be aware there would be a small impact on the budget that would be overstated for the taxes. If you do decide to use the configuration option to let Martus auto-calculate FICA for the positions that are taxable, you can set that here on the Config tab within the scenario screen. You would enter the FICA rate at 0.0765 and choose the FICA account applicable. The second option for calculating FICA is to set up pay types. You can set up separate pay types for FICA if you have several employees who have income above the Social Security wage cap. This allows you to set a limit to specify the maximum payroll tax. With the limit set on the pay type, Martus stops calculating the employer payroll tax costs on income above the cap. You can use the same GL account for both pay types, or you can use separate GL accounts for Social Security and Medicare depending upon your GL account structure. These screenshots demonstrate how each of these could be set up. Be sure to set the tax type to is tax. You should check the box for calendar year limit if your fiscal year is not equal to the calendar year and you have set a limit on the pay type. If you use pay types for FICA, then you would not set the config setting for FICA that we showed previously. For our final topic in this video, let's go back and take a look at the config screen because it affects how certain pay types are calculated. If you have set up any pay types with a frequency of weekly or bi-weekly, you must set the first payroll date of the fiscal year here on this config screen. This is also where you will set the FICA rate and GL account if using Martus's automatic payroll tax calculation. Once you have your pay type set up and configured, you're ready to add these to the appropriate positions. In this video, we demonstrated several examples of setting up pay types. We also looked at the general config settings for using the automatic payroll tax calculation and setting the start dates for weekly or bi-weekly pay types if those are being used. Please visit our knowledge base for more helpful articles and videos, or you can reach out to Martus support for assistance. Thank you for watching.